What is up, ladies and gentlemen, and welcome to a full analysis breakdown of my trades, from today and yesterday using a new strategy that I've been trying out called top-down analysis, all right? So let's just start. All right, so basically, we're going to break everything down, and here's what we're going to do. All right, so basically, first I start with the week. I made all these notes. And we have, this comes from a video from a guy named Casper, who's really good at ICT trading. So first, you got to get these pairings down weekly to 4 hours. So what I do is I go to the weekly, right? So when I look at the weekly, I'm thinking going in, what is probably going to happen this week? So as you guys saw last week, we swept a low and failed to displace or close below it. So I knew that we were going to be bullish for this week. So today I was assuming we were going to take out some bears and then go long, which is exactly what happened. Now, how I knew that for sure was I went to the daily candle, right? So let's just once again delete all this. So here's the weekly. Now, as you can see, this was Thursday. This was today, right? So yesterday we took out buyers, and then we closed below. So since we don't have buying strength from Wednesday, I knew that Thursday was going to be another possibility of a bear run. As you could see, it bled and then came back a lot more. And if you guys also can tell, where is it? We have this daily fair value gap that was formed, and we weren't able to inverse through it. So for tomorrow, I'm expecting we're going to make a bull run because remember, fair value gaps, this is a huge thing. The market is either moving to a fair value gap or a high or a low. This weekly fair value gap, we're assuming we're going to move closer to that because we weren't able to fulfill it yet. And we want to respect it or inverse it at some point. So I'm assuming Friday is going to be bullish. Tomorrow is going to be bullish. But anyway, back to the analysis. So then I went on the daily chart and I saw, okay, I'm looking for shorts. So next, we're going to go skip to the 15-minute, all right? So now, let's just erase here. And so, as you guys can see, sorry, I'm going to go back to the 4 hour, actually. So we then had this 4 hour bear fair value gap, right? And open, was right around this candle. So I noticed that we were attempting to, after inversing, attempting to purge back down. So I marked out this fair value gap that had been inversed with little strength and realized that this could be a possible shorting area. So now we go from the 4 hour to the 15-minute. And what I did on the 15-minute was, and now this is where the strategy gets very key. What you're going to do is you're going to mark out a true open. So the true day open is actually, for my opinion, 7:30 a.m. So from 7:30 to 10 a.m. for the New York session, Eastern time, we want a sweep of these levels for reversals. But the sweep must match with our bias. Remember, we were bearish today. We're expecting bears to come in at the beginning of the day. So, so the kill zone for New York is 7:30 to 10 a.m. So what you're going to want to do is you're going to drop down to the 3-minute or the 1-minute, up to you, but I like the 3-minute better for it. And now, what are we going to do? We're going to go to the 7:30 tick. So now, as you can see, this is the 7:30 candle right here. And since we're looking for shorts, we want to sweep the high. So you mark the high. Here we go. 7:30 high, right? So now that we have the 7:30 high marked out, we're going back to our 15-minute because we have our guy. And now look at this. Look at this. Look at what we were able to form on the 15-minute. By the way, I was done trading before the market even really opened, to be honest. So, as you guys can see, we have this huge 15-minute bearish fair value gap. So this is where it gets good. We have our bearish bias using the weekly and the daily. We have our high identified, and the high is inside of a bigger 15-minute fair value gap. Now, next on the pairing, 15-minute to 1-minute. I'm going to go to the 1-minute, all right? And now a lot of people, including the guy Casper, like to look for a market maker model. I like the inverse fair value gap because I think it's simpler and it's really effective. So what I did was I noted that we had this fair value gap here. And many people would say, why didn't you just take the short on this one? And you could, because we swept, but I wanted to wait until we swept the 730 and closed under the 15-minute fair value gap, which we then did in this candle. So then what I did was, and remember, market news was at 8:30, and I knew this. So I knew that I was going to have to hold this guy because we might get pullback like this. So I had a pretty large stop loss. I had it at an entrance back into this fair value gap. Luckily didn't get stopped out, but I honestly probably would have just let it go a little bit more because market news, unless it's very key news, let me see. Hold on. Where is it? Don't trade these guys, but other red folders really aren't that bad. So I targeted a break of structure, which obviously happened on the 8:30 candle, funny enough. So I took partial profit here for a 47 tick, and then I left runners. I will get that in a minute. My doorbell just rang. You ready for this? This just shows the power. We have equal lows right here, right? So if we mark those equal lows, as you can see, that was my second take profit. I left runners there, and we were able to match it. That happened at 9:13, so it was quite a long trade, obviously, but I let the runners go anyway, and when the runners are in, I move the stop loss to break even, right? So, all right, so 9 RR with the runners. Overall, you know, if you were to include the runners, which there was only one, it's a 270 tick move, which is absolutely insane. I trade 5 contracts, so if I were to not do runners and instead, or I trade 4 contracts, sorry, and instead just leave all 4 contracts in, I would have made, 2,400. But instead, I made about 1,400. I don't even remember, to be honest. But so yeah, that is the strat. Let me rephrase once again. We're going top down. It's top down analysis. You look at price. We mapped our weekly and daily. We looked at our weekly candle, and we were like, okay, we're looking for, a push down and then a re-entry into this weekly bear. Daily, we had no power on taking that high, so we're probably going to go lower, which we did. 4 hour, we had this huge bear fair value gap in the 4 hour. 15, we had a nice 15-minute fair value gap. 730 level was right in the middle of it. And then 1 minute, we get our inverse fair value gap, the key player for our entry, and we target that internal liquidity or equal lows. Absolute banger play. Now, you may say, okay, congrats, you got one great play or whatever the heck. Actually, shut up, because I got 2. So this was today's play, but now I'm going to show you yesterday's, all right? So let's just delete everything. We still have this weekly fair value gap, so let's go to the weekly. So, geez Louise. So as you can see, we have this weekly, and I was looking, at the daily once again, and so I was looking at this candle, right? So, as you can see, this was Monday, this was Tuesday. So, for Wednesday, I'm thinking, okay, we're probably going to be looking for, here, let me actually just start by showing you the entry, right? Because I feel like that's a bit simpler. So yeah, this was today's. Hold on. So as you can see, I was thinking, okay, we're probably going to go long. I took 3 separate trades. For anybody wondering, why the hell did it delete? What the fuck? Sorry. So for anybody wondering, I don't know why I deleted. Sorry. I think it was stop loss at this wick here. Yeah, so this was my play of the day. So same exact sort of thing, right? I was thinking we were going to go bullish because we had all this strength on the daily. And then, if we pull back, it doesn't matter. Because remember, what is our kill zone? Our kill zone is 7:30 to 10:30 a.m. I don't care about anything else. So we start from the top down. This was 2 days ago. So, Tuesday we had strength and broke through. So I think, okay, we're probably going to test that again. As you can see, we're on the weekly bear. So I was assuming we were going to test it. We catch the run to the test. And then if it then we stop, we wait, and if it closes back inside and respects the weekly, we can look for shorts on Thursday, which is exactly what happened. You go to the 4-hour. Let's see if I can find it. Actually, let's go to the 15-minute just because the 4-hour would get confusing. Remember, we're looking for buys. So now at 7:30 a.m., what are we looking for? A 7:30 low. Here, we have this long 15-minute bull fair value gap from a while ago. And look what happens. I'll mark the low in a minute, but we sweep price, and then we go up to these equal highs. Now, we have this 15-minute sorted out. Let's go to the 3-minute. Let's go to, what's it called? Let's go to 7:30, 7:30, 7:30, 7:30, 7:30, 7:30. All right, so here's the 7:30 low, right? So as you can see, then we go on the 1 minute, right? Now, so we go on the 7:30 or on the 1 minute. We have our 7:30 low. So I wanted us to inverse through both, or at least sweep both. So as you can see, you could have played a mini trade here as we swept under and then got strength through both. This candle had so much momentum that I entered in the middle of it. So this was a paper trade, right? To test out the strategy before open. Then here, same exact thing happens. We come under the 7:30 low. We form a fair value gap, a bearish one, and we sweep. But if you go back to the 15-minute, which I'm not going to do, but you could skip back in the video, we never actually close below the 15-minute. We never inverse on the 15-minute time frame. So we swept, and then we respected the 15-minute, and we had already swept the low by this point. So I got in. We get this huge candle, and then as you can see, we have a lot of momentum. I wanted this high, which we weren't able to get, so we had to sit through it. And then as you can see, I added on here because we made another one, swept the low again, and then inverse with strength again. So it was another mini inverse fair value gap play, which I then rode to this high. So I was able to get out for this one and get a new trade with these highs being matched. So ladies and gentlemen, it is just that simple. So what do you do? One more time. Let's get it. Start from the weekly. Figure out your bias. Then go to your daily. Figure out your bias from there. Use these pairings right here. And remember, the market is either moving to a fair value gap or a high or a low. You're also going to want to use, power of 3 for your bias, which, Asia consolidating, then we manipulate, and then we go to our bias. Or Asia makes a strong move, London consolidates, and then we read and sweep, and then continue our bias. We have our kill zone, 7:30 to 10:30 a.m. Eastern Time in New York. And remember, don't trade these guys. So you get all your analysis. Then this is the big part. Overall, you're basically, just to summarize in one sentence, you're looking for a lower time frame inverse fair value gap, not market maker, to form inside of a higher time frame fair value gap like that 15 in context of your overall bias. That is the strat. I'm now 4 for 4 with, if you include back testing, like 10 for 10. But it's really looking good, and I'm liking it a lot. And it uses a lot of bias, which I love. So yeah, that's the strat, and it works really well. Like I said, tomorrow I'm bullish, so we're gonna look to mark that low. Asia is kind of making a strong move. Let's see how long Asia is right now. Okay, not that many ticks to be honest. So let's see where Asia closes. But yeah, hopefully bulls for tomorrow, and have a good one, guys. Peace out.